Hi my friend, it's Will here over at Pips and Gains, and welcome back to another trading educational video. In today's video we're going to look at one of the most important aspects of my weekly swing trading. It is the break-even point. In this video we're going to discuss how I use it, how it helps me become more profitable, protects winning positions, and then how you can use it in your own trading to become a better trader. So before we actually get into the nitty and gritty and the good stuff, if you are new to the channel or you haven't yet subscribed yet, simply hit the subscribe button now, show the thumbs up, show some support, and let's get into today's video. So I am back down in the home office finally after a 2-week break up in the north of Thailand in Chiang Mai, seeing some family members. So I'm back down in the office, able to create some good content videos for you, in the hope that if you do use what I teach here from my nearly 15 years experience in the markets, you will become a better and more profitable trader. So let's get into the stuff here. So break even, what is it? So break even is basically a price level on the chart that I print each week when I'm doing my setups. I'm going to show you some examples in a minute. So it can be anywhere from 80 to 100 pips from my entry price. So basically what it is after my after I'm in a position and it's going my way a certain amount of pips, usually between 80 and 100 pips, what I will then do is close 50% off the position and move my stop loss to break even. The reason for doing this is pretty simple. It is to protect my profits and bank some profits. So it basically becomes a risk-free position. Now, the markets do throughout the week, especially the FX markets, they can go up quickly and then reverse the other way very quickly. They never go, very rarely they'll go straight up in your direction. They'll ebb and flow. So by doing the break even, using the break even point on the chart, the price level, this allows me to protect my profits and stops me from winning positions going into losing positions. So I'm going to show you this week was a perfect example. If you are on my email list or in the Telegram group, if you're not, you can join those below. I sent you some free setups this week, and I'm just going to head over, going to just minimize my face down the corner here, and we're going to look at just the spreadsheet. So if you are in the group, you would have seen these positions sent out to you last week. So what we're looking at here, this is all the trades that triggered this week. So we had quite a few. You can see Euro JPY, Euro Kiwi, that triggered yesterday and dropped straight down to break even. I did post in the Telegram group again that to close this at break even. We'll close this and close 50% of the position. Similar story earlier in the week with the British pound, Japanese yen. British pound, Australian dollar is still open. It is at break even, so we've already banked 100 pips. British pound Kiwi, it was stopped out. It happens. USD JPY, and again it's in a losing position. Kiwi Swiss franc, another position, and then the Swiss franc Japanese yen. So what you'll notice, what you should notice straight away here is by looking at the the spreadsheet and then looking at the charts, that this could have been a very different trading week with my weekly swing positions if it wasn't for the break even point. So see the break even levels here. Yeah, this Swiss franc Japanese yen, this trade would have got stopped out. Okay, because if this hadn't been for the break even point and texting the group the break even, this trade would have got stopped out and we would have lost 130 pips instead of gaining 80 pips. Again, similar story with the British pound Aussie. It hit the break even. It is, I think it's up, we closed at around 100 pips in profit. British pound Japanese yen, again, could have been a completely different story if it wasn't for the break even. This trade would have got stopped out yesterday, as the markets did look like they were going our way up until Wednesday or Thursday morning, and then yesterday we had the markets just reversed, going the other way. It happens some weeks, and this is why we use the break even point. Similar story with the Euro Kiwi, again could have been completely different. This triggered yesterday after the CPI in the US, and then quickly down to a break-even point, and then reversed all the way back up. We hit the break-even, we got the 90 pips instead of getting a stop out. And a similar story with the Euro JPY. This would have been a stop out also, and thankfully the break-even allowed us to bank some pips. So all these trades could have been stopped out this week, like every single trade there, if it hadn't been for the break-even. This just shows you how important this aspect of my trading is, and how it protects you from winning positions within the losing positions. As you can see from the spreadsheet there, this could have been a horrible week. Could have started off all the way up to Wednesday or Thursday morning going great. Sorry, nearly going great, and then all of a sudden the market just does a complete U-turn and all the positions go against you. If you didn't have the break even in there, you hadn't closed 50%, banked some profits in those positions, and moved the stop loss to break even, this could have been a horrible week. In fact, it turned out to be a good week, thankfully, to the break even point. So it is a very important aspect. I think any trader should be using this in their trading strategy, whether it be day trading after a certain amount of pips in profit. When I am day trading myself, after a trade goes 10 or 15 pips in profit, I'm closing 50% of the position and moving my stop loss to break even, and then letting the rest of the position run. So it's a very good tool to utilize into your trading if you're not using it, especially with swing trading, and especially with weekly swing trading, because a lot of the time, like I said, the market go up and then quickly swing the other way, just due to the way the FX markets kind of work. So that is the break-even point. If you did access my trades this week, you would have, and you did follow the instructions in the Telegram group, you would have made some nice pips. And that's it. If you want to get access to my free trading view indicator, the TRFX indicator, there will be a link in the description or the comment section of this video. You can simply access this indicator absolutely free. If you're not subscribed to the channel yet, remember, hit the subscribe button now. And yeah, so that is the break-even point. Use it in your trading, become a better, more profitable trader, and I shall see you on the next video, well over Pips and Gains.